well, we're active across China with 11 offices across mainland China, of course. So we see, I think, a good deal of what's actually going on. And sure enough, the manufacturing sector has slowed and is probably growing at about zero or negative rates. But the service sector, everything to do with the consumer and everything that touches the consumer, but then also the business-to-business service sector, that's growing. And that's good for us because that tends to be focused around the major prosperous cities, certainly the tier 1 and some of the tier 2 cities. And so the office sector in those cities is growing strongly, so is retail, so is the distribution sector into the retail in those cities, and of course online commerce growing rapidly as well. So if you look carefully at the sectors and you realize that those are the sectors that we actually are specialized in, not heavy industry, then what's going on in China, although the overall is a slowdown, the sectors of the economy we actually are interested in are going pretty well. So when I say don't focus on the negatives, it's because there's quite a lot of positive going on around the world, which is driving our business forward. So we are budgeting this year for another very good year, and I think the market fundamentals support that position.
Well, interesting, the economic situation in China, the more uncertainty there is, the more devaluation of the renminbi, actually it promotes more outbound capital. 2015 was a record year, and we forecast that, and we are sitting here again at the beginning of 2016. We also think this will be another record year for the outbound capital team.
Last year, the total take-up of office space in Shanghai was 1.8 million square meter, bigger than Tokyo, London, and New York combined. The whole of the Chinese economy is moving up the value chain, and as a result of that, we will see the demand for real estate will increase, whether it is residential, retail, or offices.